For news junkies like myself, it's fascinating to read the news and see what's going on in the world, and there's certainly been no shortage of stories of major import to world events. You've got riots in Hong Kong, you've got riots in Puerto Rico, you've got a change in leadership in the UK, and what does that mean for Brexit? Most recently, you had South Korean jets firing at Russian jets. You've had tankers seized in the Persian Gulf, and drones being shot out of the sky, and an amazing war of rhetoric between the U.S. and Iran. Yet somehow the broad stock markets and a lot of the commodities just sort of chug through. It's almost a phenomenon that, we can stress about this, but these things usually get resolved. And, once they get resolved, they're just in the background and we can just resume doing whatever it was we were doing. It's really quite amazing, actually, to see it. Part of the reason for that is markets are really bad at analyzing geopolitical events. Markets are really good at understanding interest rates, and by that I mean the bond market is particularly good at that, and how economic events affect interest rates and future inflation, et cetera. That's pretty much what the bond market does. Stock markets are very good at figuring out what's good for corporate earnings, corporate balance sheets, what can impact dividend flows. That's what they're very good at. What they're not good at is figuring out how geopolitical events affect these things. There's just so many variables that the markets are really not used to pricing. Let's focus on oil for a second. We've seen oil sort of rise toward the $60 level and stall there. Whether or not $60, and I'm talking West Texas here, is a psychological number or an actual supply and demand balance, but that's kind of an open question. But we really saw that oil sort of drift higher into the, beyond 55, into the 50, call it 56 to 60 trading range. But short of a couple of really nasty geopolitical headlines on a Friday, which got oil above $60 for a short period of time, no matter what we see out of the Persian Gulf, at least so far, has really gotten oil out of this trading range. And I think this is the same factor we've seen. People have been jawing at each other in that part of the world forever. Certainly the rhetoric is louder, hotter, and with actual ships being seized and drones being shot. That's a pretty high level of tension going on. But I suspect that until or unless something disrupts the supply-demand imbalance in global oil supplies, for the most part, the oil markets are going to go back to what they do well, which is basically assessing supply and demand on a relatively routine level, saying, okay, the U.S. is producing plenty of oil. There's still oil flowing out of the Persian Gulf. There's demand challenges, whether it's by a slowing China or slowing world economy overall, or substitution, or some combination of the three. And so for the most part, the markets basically read the headlines, digest them in the short term, and when whatever transpires doesn't really transpire into much, they just go back to what they were doing before. And I think to a certain extent, markets become inured to that. So the more scary sounding headlines you see with little follow-through reaction, the more the markets just tend to look right through them. Of course, there's the biggest danger of all, which is one time they won't. But that becomes one of those events that most market participants would rather not deal with and rather not think about. So as long as you don't have excessive risk exposure, I think in the short term, the markets are just sort of looking through global events. I think that's a sign of a very sanguine market. I think if you get into a more skittish environment, and I don't have time to get into all the causes of future skittishness, all bets are off, and then every little news headline moves markets dramatically. Right now, though, markets see a positive liquidity environment, and they go back to focusing on what they want to focus on, and we'll worry about it later.